So, in the middle of November 2025, the financial markets just got thrown into absolute chaos. We're talking stocks plunging, crypto collapsing, and this deep, deep sense of uncertainty just gripping everyone. So, what on earth happened? Today, we are going to unpack the perfect storm of a divided institution and a sudden information blackout that sent shockwaves through the entire economy. All right, let's get into it. And honestly, this quote from Fed Chair Jerome Powell just says it all. The guy whose entire job is to give us a clear economic roadmap basically just admitted he can't even see what's in front of the car. That single sentence tells you pretty much everything you need to know about the anxiety that was in the air back in November 2025. So that fog, a big source of it was coming from inside the Federal Reserve itself. Yeah, the very institution that's supposed to be this pillar of stability was showing these deep, very public cracks in its foundation. They just couldn't agree on what to do next. The trouble really kicked off with this decision right here. So late October, the Fed cuts rates by 25 basis points. Now, a rate cut, it might sound routine, but the vote, that was what really mattered. It was 10-2. You had one member pushing for an even bigger cut and another wanting no cut at all. A split decision like that is a massive signal of some serious disagreement behind the scenes. And this conflict really breaks down into two main camps. On one side, you've got the hawks, people like Boston Fed President Susan Collins. They are terrified of inflation and think rates need to stay high. But on the other side, you have the doves, like Governor Christopher Waller. They're way more afraid of recession and want more cuts to protect jobs. The wild part is, they're all looking at the exact same economy and drawing completely opposite conclusions. That's the real problem here. And look, this isn't just some minor squabble. You have to go back more than 3 decades to find this many Fed officials publicly disagreeing on a policy decision. So the key takeaway here is that this level of division is incredibly rare, and it screams to the market that the Fed has absolutely no consensus on where the economy is actually going. Okay, so let's move on, because this is where things get even crazier. Right at the moment this divided Fed needed clear, hard data to settle its arguments, the entire information pipeline just got shut off. They were literally forced to fly blind. And what was the cause? A historic 43-day-long government shutdown that finally ended in mid-November. You see, while the government's closed, all those agencies that collect our vital economic data, think the Bureau of Labor Statistics, they were closed too. And that created this massive, unprecedented information vacuum. And you can see the direct impact right here. That October jobs report, poof, canceled. The super important November jobs report pushed all the way back to December 16th. Now, why does that specific date matter so much? Because it was 6 days after the Fed's final critical policy meeting of the year. They had to make their decision without knowing the first thing about the state of the American labor market. Just incredible. But here's where it gets even more confusing for the markets. While Chairman Powell is out there talking about driving in the fog, you have other Fed officials like Governor Waller saying things like this. It showed that not only were they divided on policy, they couldn't even agree on whether they had a data problem to begin with. So, what happens when a central bank that can't agree with itself suddenly gets hit with a total data blackout? Well, you get Wall Street whiplash. The markets, which absolutely crave certainty, got hit with a double dose of pure confusion. And the reaction? It was violent. The pain was immediate, and it was sharp. On November 14th alone, the Dow Jones dropped 800 points, a massive one-day rout, and it was mainly driven by investors just dumping their shares in big tech companies, the very stocks that had been leading the market all year long. Then came this major technical breakdown. The S&P 500, that's a really broad measure of the market, it fell below its 50-day moving average. Now, I know that sounds a little technical, but for traders, that line is a critical line of defense. And the fact that it broke after holding steady for 138 straight sessions, that was a huge red flag that the market's whole positive trend was in serious jeopardy. And finally, you could actually put a number on the fear. The VIX, which is often called the market's fear gauge, it spiked up to a level of 20. See, anything above that number is a sign that real, genuine anxiety is taking hold among investors. The message couldn't be clearer. The market was officially in a panic. And this fear, it wasn't just stuck in the stock market. Oh no. The risk-off feeling spread like a contagion, spilling right over into the world of digital assets and triggering this sudden, brutal, cold winter for the crypto markets. The big headline, of course, was Bitcoin. The world's biggest crypto just plummeted below that key $90,000 level. And here's the crucial part. In just a matter of days, it had completely erased every single dollar of gains it had made for the entire year. All of 2025's progress, just gone. And just to add some more fuel to that fire, Bitcoin's chart flashed this classic, dreaded, bearish signal, the death cross. This is what happens when a short-term price trend crosses below a long-term one. For anyone who follows charts, it's one of the most feared signals out there, and it suggests a major, prolonged sell-off could be on its way. And yeah, the panic was everywhere you looked in crypto. Over $2 billion gushed out of Bitcoin ETFs. The Crypto Fear and Greed Index just plunged to a score of 17, which means extreme fear. And it wasn't just Bitcoin. Other major coins like Ethereum and Solana were down big time, as even the long-term institutional holders started heading for the exits. So let's step back and pull all these threads together. This wasn't just some random bad week for the markets. It was the result of multiple overlapping crises that brought us to a really critical turning point. So here it is, the anatomy of that anxiety. You had a Federal Reserve that couldn't agree with itself. You had a government that couldn't even provide the basic data needed to make decisions. And that toxic combination created this intense volatility in stocks. It exposed how stretched tech valuations had become, and it triggered a total collapse in the already fragile crypto markets. And that leaves us with this one final critical question. All of this chaos brought the markets right to the edge of a cliff, with huge decisions looming in December. And it really makes you wonder, was this just a brief moment of madness? Or is this level of volatility, this kind of deep uncertainty, is this the new normal we should all be preparing for?